Welcome back. As a quick refresher, we left off last time. Chris Clark had opened a business with $25,000 and he had taken $20,000 of that and purchased a piece of land. So we left off with our accounting equation: assets of cash $5,000 and land of $20,000. So we have a total assets of $25,000, and Chris Clark's equity or capital account is still $25,000. So let's take a look at our next transaction. And our next transaction, Net Solutions needs some supplies in order to conduct its business, and it's buying those supplies, but it's going to pay for those supplies sometime in the near future. In other words, it charged the supplies. So let's see how this affects our accounting equation. In our accounting equation, we now have a new asset on the left-hand side of the equation called supplies. So we have cash of $5,000, we have supplies $1,350, and we have a piece of land still at $20,000. So now on the left-hand side of the equation, we have $26,350. And then we go to the right-hand side, we can see now we have some liabilities. So we know assets equal liabilities plus owner's equity. Our liability account is called accounts payable. Accounts payable is anything payable in the next 30 days normally, or payable within the next 30 days are normally accounts payable. If it gets longer than that, you're normally going to have a note or something like that involved. But we got an accounts payable account. We owe $1,350 for these supplies. We still got Chris Clark capital, $25,000. Add those two together, we get $26,350, and that equals what we had on the left side of our equation, $26,350. Everything's in balance, so we're ready to take a look at our next transaction. Okay, our next transaction, Net Solutions is doing some business, and that's good. So Net Solutions received $7,500 for providing services to its customer. Business, of course, earns money either by selling goods or services to its customers, and this is called revenue. And so we have another account now on our right-hand side, because this is a capital account. It's one of the revenue is a capital account, and so let's see how that affects our accounting equation. So on the left-hand side, we had increase in our cash, $7,500. So now we have $12,500 in cash. We have $1,350 in supplies, and we still have our land at $20,000. So if we add up the left-hand side, we get a grand total of $33,850. And let's take a look at our right-hand side. And we have on the right-hand side, we have $1,350 in accounts payable for the supplies. We have Chris Clark capital, $25,000, and now we have an addition to that capital in the form of fees earned, $7,500. So if we add up the right side, we get $33,850, and that equals what we had on the left side, $33,850. So we're in balance, and we're ready to move on to our next transaction. Our next transaction, as in most business, it has some expenses, and during the month, Net Solutions had to pay out $1,225 in salaries. It had to pay out $800 in rent, utilities $450, and miscellaneous expense item for $275. So let's see how this affects our accounting equation. Of course, this was cash paid out for these expenses, so that's going to affect our cash account. And the total of those expenses was $3,650. And when we subtract that from our cash, that leaves us $8,850. We still have our supplies, $1,350, and we still have our land, $20,000. And when we add these two together, we get $30,200, and I think my math is correct. But let's take a look at the right-hand side, and this will be a subtraction from our capital account because expenses are subtraction. We still have our original accounts payable, $1,350, still have the capital, $25,000, still have the $7,500 for fees, and then we have each one of these expenses shown as minus. And when we total that all together, we should come up with $30,200, which is what we had on the left-hand side. So we're in balance and ready to take a look at our next transaction. And in this one, Net Solutions had to pay for some of those supplies. It paid $950 on its account for the supplies. So this is going to, of course, affect our cash account, and it's going to affect our liabilities account. So let's take a look at the left-hand side. We have minus cash, $950. So now we have cash of $7,900. We have supplies of $1,350 and still have our land. And when we total those up, let's see, we're going to get $29,250 if my math is correct. And if we take a look at the right-hand side, the only thing that changed was the liabilities or accounts payable account, and now we only owe $400 on those supplies. We total this up and we'll get what we had on the left-hand side. We're still in balance, ready to move on to our next transaction. And in this transaction, remember in the business entity in this transaction, Chris Clark went out and checked his supplies and found out he's only got $550 worth of those supplies left. So those supplies are no longer, that difference of $800 is no longer an asset. It now becomes an expense of the company. So what we have to do is we have to subtract $800 in supplies from the supply account. So on the left-hand side, we still have our $7,900 cash, but we only have $550 of those supplies left, which is an asset, $20,000 in land, and when we total up this side of the equation, we get $28,450. And when we go to the other side, the only thing that we do is we add a new expense account called supplies expense, and we put that $800 in there. So when we total up this side, we get the same thing we had on the left, and we're still in balance. And we've got one other transaction that we're going to look at, and Chris Clark needs to take some money out of the business to pay his personal bills with. So he does a withdrawal from the business for $2,000. And of course this is going to affect our cash account. So the cash account now drops by $2,000 down to $5,900. Still have our $550 in supplies, still have our land. So now we have on the left hand side a total of $26,450 if my math is correct. And then we'll take a look at the right side. We do have a new account on the right hand side called Chris Clark Drawing, and it's a subtraction from the owner's equity, so it's minus $2,000. So we have our accounts payable $400, capital account $25,000, drawing account minus $2,000, fees earned plus $7,500, and then minus all of our expense accounts. And we total that up, it should come up to what we had on the right hand side of the equation. And so we're still in balance, and this completes the transactions that we're going to talk about. The next time what we will do is in the next section is we'll talk about our financial statements and explain how they interrelate. But what you need to do at this point, this concludes my lectures for this week, but you have a pretty good number of exercises that you need to do. You do need to do those, and you need to submit those answers to me through the Dropbox that I'll have set up for you to submit your work. Thank you, and I hope you have a good day, and I hope you are able to master the concepts we talked about and are able to work through the exercises that you need to accomplish. If you have any questions at all, please contact me. Send me an email through Angel. Send me a message through Angel, and I'll get back to you as quickly as possible. Thank you, and have a great day.